All right, what's up? This is Ruben from TGE. And in today's video, I want to talk to you about the single most powerful fix for struggling option traders. And that's something called stop losses. And I'm going to show you actually a stop loss that you can use, a stop loss strategy for your option trades. Okay, so this way you keep your losers small and your winners bigger. That's the main objective, right? Two you have two goals when you're option trading. One, protect your capital. Two, protect your capital while maximizing your gain. So this, by fixing your stop loss strategy, you'll be able to level up on your trading, okay, on your option trading. But before we get to it, let's talk about the wins today, okay? We swung CCJ, and some of the members actually did way better than I did, 118%. Kevin, 84% on CCJ. And we took also IONQ for a leap. So he's up 1%, which is really, really good. So awesome. 22, 15 contracts, man. The boy made money. That's nice. And I only got a 57%. Okay, that's all right. All right, let's talk about the stop loss strategy. Okay, I'm going to show you two charts here, and this is Tesla. Okay, let's say that you want to get contracts for Tesla, right? Remember, the main objective that you want to do is always keep your loser small. Okay, if the trade is not going against you, it's okay. Cut it off and just hop in whenever it's ready, right? You don't have to think like, oh, it's gone or whatever. You can always hop back in, and especially if you have a six-figure account, you cannot afford to be putting in like $1,000, $2,000, $10,000, and then letting that thing go down 50%. That's just going to kill your portfolio really quickly. Okay, so let's talk about stop loss strategy here. Let's say that we get into a contract here for Tesla. Actually, let's forget Excalibur. Let's use TradingView real quick. Okay, here is Tesla, right? Something that we did here is that we are going long on Tesla. We saw that we have these key levels here, 352, we have 360 at the top here, we have 350. These are levels that Gextron is providing to us from our app, and it's telling us where the daily key levels are as of right now. So as long as Tesla is holding this 350 zone, potentially we can see more upside, right? But here's where we got in, right? We got in around this zone right here. I believe it was around this candlestick right here. We got in for some upside momentum. In the contracts as of right now, they're up about 11%. They were up at a high of 20%. But when we got into this contract, before you ever get into an option contract, okay, one, you got to look at a couple things like the Greeks and stuff. You got to ask yourself, where's my stop loss? Where do I set my stop loss if the trade goes against me, right? And so what we do here, and let's talk about what most traders actually fail at, what they usually do most of the time. Let me go here. Hold on. Let me put my face back in here. Okay. What most traders do is that they get into a trade, and their rule of thumb is going to be like 30%, 25% stop loss. That's already bad. Okay, it's bad because you don't know just the way we analyze volume. Okay, we have to analyze volume on the option premium chart. The way we look at swing lows and swing highs, we got to do that on the option premium chart. Okay, so and sometimes they set their stop loss. Some people don't even know about that stuff, and they set their stop loss all the way here. And the thing about option contracts is that they decay faster than the actual stock, right? And because of some Greek called theta, if the contract goes south, it goes against you, and let's say it expires in 2 days or 3 days, theta is going to destroy delta. There's something called delta decay, okay? And delta decreases and decreases, and let's say that it goes down all the way down to here. It bounces back. You bought at $1 originally. Now it's down at 50 cents. It goes back. It may not be at $1 anymore. it may actually be at 70 cents or something like that. You would still be down 30% on the trade. Okay? And so the way we think about stop losses from the very get-go, okay, this is the thing that you have to do. The way you should think about it is that you gotta, as soon as you get into the contract, you gotta look at the option premium chart and ask yourself, where is the most recent swing low or the most recent high volume candlestick on the option premium chart? Okay? So we take a look at this chart, it's about around this area right here. Why this area? Because if we just look down below it, there's high volume there. You can even do this side, there's high volume there, right? So if the option premium of this strike and expiration goes against you, let's say you bought at 345 here, and it goes to, let's just pretend that this is 250. Okay, let's say that this is what it is. This zone right here was 250. Then that is where your stop loss should be at. Because if it goes, but there was, the way to think about this is like, okay, at some point for this contract itself, there was a lot of buyers coming in because of the volume at this area. And so you want to take it higher from this area, right? Okay, but if we go below it and we sweep that out, it may go to the next level. What's the next level? 210. Okay, so you got to ask yourself, are you willing to go from 250 to 210? Are you willing to lose $40 on that trade, on that single contract? Probably not, right? That's too much of a loss. Okay, so that is the smart way to think about stop losses. And I gotta look at this trade on Tesla because we're still in it. Let's see what's going on here. Still holding this P-trans level. Awesome. Nice. Okay, so that is the way to think about stop losses from the very beginning. If you do this, you're going to keep your losses very small. Typically, what we like to do is we like to see if we know we're bullish on a security like Tesla, right? We want to see price start to go back up with some volume, and we'll use that recent low, intraday recent low, as the stop. It might do this, right? Let's say that at open, it might go like this, and if we start seeing it go back up, okay, we're gonna make this our stop instead of the all-time low. Okay, depending on the situation, depending on how much time there's left on the option contract, etc. If I have 2 weeks out, 3 weeks out, a month out, I may use the daily low. Okay, but if it's like, less than a week or less, I'm gonna use the intraday low. So like this market structure of up and down, the swing low. Okay, because at some point there was buyers coming in here to take the price back up, right? And so if we buy in around here, I'm gonna make this my stop loss. This is gonna be my stop loss right here. Stop loss. So always look at the option premium low. Okay, that's the easiest way to do this. It's the easiest. So instead of like, let's say that this costed you $1, right? Let's say that this is I don't know, 80 cents. Okay, you lost $20 on the dollar contract. That's not bad. Let's say that the all-time low for today, depending on the volatility, something like Tesla, is actually 65 cents, right? Losing $80 rather than, let's say it's 67 cents instead of $40 is a much better. This is how we keep our winners, our losers very small. If we go back to just this chart, because I'm guiding everybody here on the trade, I'm saying, hey, as long as we look at Palantir, small loss, 2% loss, Baba, 16% loss. Okay, this is how we keep our losses very small. And even if you go back into some of these other trades, 4 out of 6, Sewell has a lot of winners here. BA 108%, TEM 25, 41% on Oklo, right? 54% on Netflix put. Okay, but if you read his thing right here, it says 4 were successful, but QQQ and Tesla were small losses. 8 to 10% loss. These losses will never wipe out these gains. That's assuming that your position sizing is also on point. If your position sizing is very off, you're going to lose. Okay, that's rule number one. But that put aside, your stop loss is very important. Now, okay, so that's how we think about stop losses from the very beginning. Okay, from the very beginning, before we even look at the option, before we press buy on that option premium on that brokerage, we say, okay, here's the price, where's my stop loss? Okay, here's the intraday low, it's going to be 80 cents or whatever that case is, right? Now, how do we think about stop losses as price is going up, right? Let's say that you're making money. Let's say price goes up, and now let's say that you got in for $1,000, right? 1% of $100,000 account. Okay, and now it's up 20%. So now you're not managing $1,000, you're managing $1,200. 20% increase, 20% position increase. We'll say P&L. Okay. At 20%, we like to stay very, very, very defensive. Okay. So already here, we're already setting a break-even stop loss. Automatic. I think that's how you spell automatic. Okay, automatic break-even stop loss. And we call this actually a trailing stop loss. Trailing stop loss. So what does this do? This prevents what most traders fail at, right? They have a green trade and then it turns red. It's going to happen. Okay, you're going to have maybe series of break-even trades, but this is a lot better than turning this $1,000 into into $500, right? Losing half of it. This is much better because then you're going to be like, oh man, I wish I would have just sold that break-even. That would have been so much better, right? Okay. And so the next thing that we do for our trailing stop loss, this is a trailing stop loss strategy. Let's write that out. Trailing stop loss strategy. Okay. So you start with original investment. It's $1,000. It increases by 20%, and then you set an automatic stop loss. If the option trade P&L hits break even, just get out. Just get out. It's much better than hoping or saying like what could have happened. We don't know where price is going to go. All right. Let's say now it goes to 30%. And then the next thing, for every 10% plus 10% P&L increase, okay, for every increase you got to increase your trailing stop loss, your TSL, by 10%. So what this means is that let's say that your P&L now your account goes to 30%, right? Now you're managing 1,300 plus 30% P&L, right, on the trade. So now your TSL is when your position P&L is going to be 10%. So $1,100 is your new trailing stop loss. And every time it goes up 10%, you just protect, right? So now we're following rule number 2. Protect your capital. Rule number 1 is protect your capital, which is this part right here. This is rule number 1. This is how you keep protect your capital. Keep your losses very, very small. Now, the next rule is maximize your gains while protecting your capital, right? And this is how you do that. Okay? This is how you fix your issue of losing money all the time or a lot of money, right? The game is about survivability. And so once you become 20% profitable in your P&L, automatically set up break-even trailing stop loss. You get out, right? If it goes down from $1,200 in this example, if it goes from $1,200 to $1,000 in premium on that single trade, get out. Just look for another trade or look for another setup. And then every time it increases by 10%, let's say it goes from 20 to 30%, then you increase your trailing stop loss by 10%. So if it goes to 40%, then your new trailing stop loss is 20%, which would be 1,200, and so on and so on. And again, because now you're no longer managing $1,000, you're no longer managing $1,200, you're managing $1,300, right? And so this is how you're keeping. This is how you're gonna keep as much capital as possible as your trade goes up. So once that trailing stop loss hits, you get out and you take some money off the table. Okay. If you fix this, if you do this, I promise you that you're going to see huge results in your P&L, in your account P&L. Okay, you're going to see huge dramatic. What may happen, because this is a very I would say strict stop loss strategy. You may hit a lot of break evens or a very small loss streak, and it may feel like you're just not getting it. But what you're gonna see if you zoom out is that you're losing very little money based on the amount of capital that you have in your account. In the days that you do have winning streaks or you have a big win, like we did with CCJ, your account is gonna explode. Okay, you're gonna see like very very small down. It's gonna look like this. I'm gonna show you. It happens very often with us. And most of the time, if you have the right strategy, you don't need a high win percent rate. You just need a good risk to reward ratio and very small losses, right? So it may look like this: flat, 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 maybe a little bit of down slow, and it may feel like you're not doing anything right. But when you do start hitting these trades, you're gonna see a spike. It happens all the time, and it may look a little bit like this, and then you're gonna get a spike. It may look like this and like this. But okay, that's what happens if you follow this trailing stop loss strategy. And if you follow this stop loss strategy. Okay? But this is also taking into consideration that your position size is on point. If you look at this example, I say 1%. What we like to do inside the private Telegram group is take as many chances as we possibly can at our setup as possible, right? And the way to do that is by sizing them small. So 1%, maybe 2% if you're like doing a leap or something like that, 3%. But most of the short-term trades that we do inside the private Telegram group, it's just 1%, 0.5%. So it's nothing crazy, okay? But this is how you give yourself the opportunity to take a lot of trades on your account, right? And if you do follow this, you're going to see that your account P&L should look something similar like this. It should be like a pretty decent slope. Okay, if it doesn't look like that, it may be something like this. But you'll see, higher highs and higher lows if you follow the strategy. Okay, I hope this video was helpful. Let me know how that goes. If you have any questions, put them in the comments section. If you want to trade with me or my team, or if you want to get access to Gextron levels, I'll put a bunch of links in the description box. Let me know what's going on. Peace.